Hello guys, welcome back to this video. The objective of this video is number one, I'm going to show you or explain what is forex trading. I'm also going to explain why exchange rate currencies changes over time, then what do forex traders do, and then I'm going to provide series of examples and many more. But first of all, let me show you something. Now if you check here, you will see that these are foreign exchange places or ports, mostly in the airport. This is where it all started. This is how it all started physically before it went online. You can see there are various ports where people exchange money. So let me get back to the video. So first, have you ever wondered what happens when you travel to another country, you or any other person, and then you need to exchange your money for another? Or why the price of something you buy online from one country to another changes every day. This is all connected to something called forex. So that is why when people travel to another country, they'll have to exchange their money for another money. That is what happens, and that is the basis under which forex operate. So basically, what is forex? Forex, we also call it foreign exchange, which is the global marketplace where people trade currencies. It's just a big market where money from different countries is bought and sold, but instead of buying goods and services, people are selling and buying different types of monies. So let me give you an example. Now I want you to imagine that you live in US and you want to travel to any in one of the countries in the Europe, maybe you want to go to England, in Britain, or you want to go to Italy, etc. You will be required to exchange your US dollars to euros, because euros is the currency that those countries are using, those European countries are using. So the rate at which you exchange your money is what is called exchange rate, and this rate is constantly changing. So you will have to go to any of these places and find such kind of people who want to exchange your money so that you get the euros that you are going to operate with. Mostly they are found in the airport. If at all you've been to any airport, you will find such places where you can change your money from, let's say, USD, that you can see here. This point is saying changing GBP to USD and USD to GBP, so you can change there and there's no commission, etc. So let's continue. So why do exchange rate or currency changes over time? So it all boils down to what is called supply and demand. If more people want to buy euros with their dollars, the value of the euro goes up and the value of the dollar might go down. This is happening all the time in the market. So that is why you see that in most occasions, even on television, when they are discussing currencies, you will see something like this: movement of up and down, movement of up and down, and then at some point it moves like this. So that is what is happening. Supply and demand kicks in. So when supply kicks in, it changes. When demand kicks in, it changes. That is why in most occasions you will see it changing. You can read that. So basically, what is forex trading? Forex trading is when people buy and sell currencies in the hope of making a profit. They try to buy a currency when its value is low and sell it when the value goes up. Forex trading is done by banks, business, and even individuals like you and me. We call ourselves traders. So if you are just being ushered into forex trading, this is what you'll be expected to do. Now, forex is all about exchanging one currency for another at changing rates. Understanding this can help you make sense of how money works when you travel, shop online, or even if you want to try trading yourself some days. So that is basically what is all about forex trading, exchange of money between sellers and buyers in a summarized way. So when sellers step in, the market moves down. When buyers step in, the market moves up. Those movement of ups are based on these particular values you are seeing here. These ones are what are called currencies. These ones are what are moving up and down. Now let me show you an example of a trade. Suppose a trader believes that the euro, we denote it as EUR, euro will strengthen against the US dollar, we denote it as USD. They believe that euro is going to be stronger than the dollar. The trader will buy euro USD, meaning they are buying euros and selling the dollars. If the euro value rises against the dollar, they can sell the euros back for another dollars, making profit. So in that situation, as a forex trader, there'll be a price under which they'll be buying, and then there'll be a price under which they'll be taking their profit. That is what is called buying price and take profit. That is what happens in most occasions. So let's proceed. So basically, what do forex traders do? Forex traders monitor currency markets in TradingView. This platform you're seeing here me operating is called TradingView. If you search it, just look for tradingview.com, you will find something like this, and then you come here, click it, and then you're going to find here you can be searching any currency. Like in this case, we are having if you search euro dollars, this will be the brokers. Don't mind them, they're showing the same thing, it's only that in different websites. These are brokers: FXM, Oanda, Forex.com, Capital Market, Pepperstone. All these are different marketplaces, market sites, but they are all showing the same results of euro USD. So don't worry about these ones, just click one of them. Mostly people like using Oanda and FXCM. Now they buy and sell currencies in brokers account, e.g. Xness, Pepperstone, IC Market. You can see them here. This is where we buy. After monitoring the trades in TradingView, here is where we go and buy. We create account with them, blackbull.com, Saxos, Forex.com. You just choose the broker that people use mostly from your region. So that is what we do, and we buy and sell currencies in different brokers account, and then we manage risk. We determine the amount of money we want to risk today, tomorrow, or we will be risking per account, the lot sizes, the leverage, we set limits, etc. Now there's something I didn't say here in monitoring currencies in forex trading. Currencies are traded in pairs, e.g. euro USD, Great Britain pounds versus Japanese yen, Australian dollar versus USD, as you can see here. So there are so many. If you just click here in forex, you will find them here, so many of them. So it is just your responsibility to be searching them here and getting them, and then we execute trades in the same brokers. We review and adjust strategies because we have different strategies of buying and selling the market, and then we continuously learn from them, and most importantly, we don't give up. So basically, if I wrap up, forex trading is all about buying and selling of currencies. There are different kind of currencies, as you can see. So you'll be introduced to what is called charts from this point henceforth. So if you check here, you will realize that there are charts, as you can see here. These ones are charts. This is how the market moves. So you can have them in terms of candles. You can also have them in terms of lines. So this is what people are mostly used to, lines. This is how the market is moving, in lines. So traders prefer to have them in candles like this. So each candle represents a certain time frame, and those time frames are here listed. Like in this case, I'm dealing in 5 minutes time frame, but I can also deal in 4 hours. This one's now one represent 4 hours. I can now go back to 15 minutes. Each of them represent 15 minutes, etc. So that is how basically these candles are moving in that simple manner. So from this point henceforth, you can check my other video to know exactly other things about Forex.